Aloha everyone, Joshua Hayes at BigWaveTrading.com. If you read my commentary and watched my video lesson on Thursday, you know that I was looking for the market to bounce on Friday. When it was gapping down in the morning, I thought though that it's possible that we could have a waterfall crescendo moment before the bounce, but instead stocks gapped lower, rallied higher throughout the session, and closed near the high. Putting in a classic Friday short squeeze, which is something that happens a lot on Fridays with the computers in complete control. A lot of people think that the markets overall dynamics are broken, but to be honest with you, the numbers aren't that bad. I know fundamentals are the best at the top, and I know that everything is the best at the top, but until the yield curve inverts, it's hard to become a full hardcore 100% bear here. So I still am in the camp that any pullback is buyable. And I looked at some of the sentiment indicators that I didn't put down, and the CNN fear and greed indicator, it goes from 0 to 100. You can go check it up, the CNN Money, Greed, and Fear. It's at 10. It was at 8 last week, and it's at 10 now, so that's extremely low. The put-call ratio closed out Friday above 1 at 1.09 and hit 1.18 Thursday, indicating that short-term potential extremism in the bearishness. The NAAI Exposure Index did increase back up to 81%, so there's nothing really bearish in there. The AAI bulls, it's only 37 to 23% bears, but still there's nothing that bearish there. And in the Investors Intelligence Survey, even though the bulls are back under 50% at 48, the bears are only at 14%. So if we're looking at really great bottoms where I can get a new long position and be like, everybody that's watching this video lesson, I want you to put 5% to 10% of your account capital into Twitter. I'm about 98% chance, sir, that it's going to go up. Go to the options market if you really want to get some real alpha out there, and I'll find the right at the money or in the money option for you if you decide to go that route. I can't do that. Even though some of these indicators are showing extreme fear, until they all do, and until the market stages a correction bigger than 10% and longer than a week, I've got to continue to just do my piecemeal trading. I can operate like a hedge fund because I have a larger size account, and I use Interactive Brokers for this account for this kind of trading, which is only $1 per share. Minimum investment is $1,000 per position, and I got all the time in the evening to do this because I live on Maui. So it's conducive for my style, but it's not conducive for you. So even though you guys see 15 new long positions and 3 ad signals, most of them can't be touched by most people. BGNE, not shown on the chart with the 20-day moving average, is slightly extended, but it's a perfect speculator quality stock, so I got to go long. VRNS, this is canceling and perfect speculator stock. You can see though it's extended from its 250-day moving average, so once again not the safest selection. EDUC, this is one of the best ones. It's canceling perfect speculator, and it's right at the 50-day moving average. If there's any stock out there that I could say you can push your capital into, it'd be this one, but there's a severe problem with that. You're not going to be able to. It's too thin. Look at its average volume. It almost had average volume on Friday, and it's under 50,000 shares. You can't do much with that. So even though I've listed as a 4% technical long signal, since it's canceling perfect speculator and it's not extended, there's no way in hell I can probably put more than, I'd say, $10,000 into this name. I can't see me really going over $10,000 into EDUC without being able to move it. So I'm going to stick it to around 2.5% of my capital, but that's the best one out there. And sadly, it's too thin. Then moving along, we have Etsy. Etsy, this is perfect speculator quality and canceling quality. But once again, even though it's an earnings winner, it's really extended, so it's not the safest. UTMD, there's a pretty good signal off the 50-day moving average, canceling quality. But as you can see, it's kind of a choppy, volatile mover higher, but getting it off support's good. But once again, look at that huge volume surge today. Look at the volume. You can't get a lot of shares into this, so you have to realize that it only averages 15,000 shares a day. What are you going to do? How are you going to load up? The only good news is it's not a dollar stock, it's an $88 stock, so it's not like you can really buy a ton of it if you didn't have a whole lot of capital, but still, the points out there that they're good setups, but they're not great. SNI, this of course is a merger with Discovery back here, but it still trades on its own and with its parent company, and it's a good looking chart pattern, so I want to take it. But once again, extended from the 10, 20, 50, and 200. Nothing just lines up perfectly. IPCC, this initial move is because I think it's GVA, or am I in the wrong stock? That looks like the right one. Yeah, so GVA is acquiring IPCC, cash and stock, so it's going to move with it, but IPCC, great chart, so I'm going to play this one. But once again, extended on from so many moving averages, it's hard to get too excited for everyone here. Vico, this is probably one of the better setups, but it's off its lows. It's not trending higher, it's not near new highs, so it doesn't have clear skies ahead. It could easily run into resistance here at the 200-day moving average, the highs here in October and the highs here in August. But this is one of the best, safest, quote setups of them all if you use especially this level as your first cut loss and this is your second cut loss. And remember, new traders on all of these signals. I'm not going over the limit price in this video lesson as we don't have time, and I'm not going over the stops, but I listed them all, every single one on the new positions page. There's no excuse to be caught with your hand in the cookie jar if they do not move higher immediately. And like I keep saying, that first stop goes for me, I'm moving half or all up immediately. I do not wait for the second stop to come into play, no matter how stocks pull back here, because we're in a volatile market. I'd rather get knocked out, get back in, and or find a new signal and move on. It's just easier that way for me with low commission costs, and just since I trade like a robot, it's not difficult for me. But if you're looking for a better setup overall with lesser risk, Vico is definitely it, but it's just a canceled quality stock, wasn't confirmed anywhere. You can see volume is trending lower, and while BOP is growing, it's not at the previous level, so once again, not everything is lining up. ADVM, this is a stock nobody should touch. It has earnings coming up, so I'm taking a very small measure position. I like the chart, but once again, is that green BOP level back here to those max green BOP levels? Is volume huge? Is it pulling back on quiet volume? No. So this is not a good setup either, but it's perfect speculator quality. So I want to poke, especially if we're low here, because I want to try to remember a data point at the end of the video, which I don't think I am. So I'm going to go over it right now. So I just read this weekend, which I didn't know about. I guess I heard of it Friday, but I didn't look it up. Bank of America Merrill Lynch shows the highest outflows in ETFs and mutual funds ever. Now, the chart that I looked at only went back to 2003, so I didn't see the 2000 and 2002 data, but they said the combined outflow of ETFs and mutual funds was the highest ever. I know we didn't have a whole lot of ETFs until after 2003, so it makes sense that they only show the data going back that far. But the outflow was huge. I wish I would remember the number, but it's massive. It's massive. Remember the record amount of inflows that I told you were coming into the market in January, and with the pump and dump price action and the Dow Jones Industrial Average had me nervous that a big correction was coming, and boom, we got it. Well, at the very flip end, with these kind of massive outflows, and with the I think we're at like the highs in share buybacks last seen in 2015, so we're near all-time highs in share buybacks with corporations and with mergers and activities, mergers and acquisitions, really picking up steam as this market pulled back. That, along with the share buyback, that's the floor in the stock market to rally higher. And even though Fed's hiking interest rates, and I constantly warn everyone that we're near the final innings, we're not in the ninth inning yet. We'll be in the ninth inning when the yield curve inverts. Markets can still rally higher after the yield curve inverts, but you can be 100% sure we're at the end and stocks will go down. But until that happens, I'm going to keep piecemealing it. So getting back to ADVM, perfect speculator quality, got to take it. CYRX, I love this longer term chart. I love this cup-like pattern, cup handle, whatever in the hell you want to call it. I love this pattern. But short term, CYRX, very extended from the 200-day moving average, and like every other signal, extended from the 20-day moving average. So once again, it's not perfect. And where's the huge green BOP surge to confirm with the volume? So like I said, I don't mind piecemealing all these, but if you're looking for perfection out there, it's not it. SGMO, I go long here. There's my first cut loss level. I really don't have a second one. I kind of just threw the 50-day moving average out there, but I'm going to be out of all of it to most of it if it fails this level. But once again, BOP going wrong way, heavy volume in the base pullback. You need to look at everything. But I'm doing the reward risk ratio. Let's say that we've seen the lows in the market. If I use this support level and if I can get any kind of part of this previous uptrend, the reward risk ratio is greater than 4 to 1. Got to take it. And then there's UBR. This is it was in my perfect speculator scan, so I got to take it even though it's just a Brazil ETF. Huge volume and BOP surge. Got to take it. NBIX, right off the 50-day moving average. This was in my perfect speculator scan. Got to take it. But once again, not perfect. Where's the volume surge? Where's the BOP surge? LAYN, another stock that's being acquired in a merger and acquisition deal. Maybe that's the one that's getting acquired by GVA. IPCC and Lane, both are getting bought the same day, and I can't remember which. Oh, Kemper. That's it, Kemper. So Kemper's getting one of them too. Kemper and GVA is getting IPCC, and Lane, I don't know which one, and to be honest with you, I really don't care. But Lane, same similar chart pattern as IPCC, almost the identical pattern. Same situation goes. First cut loss level, second cut loss level. Love all the green BOP, love all the accumulation, but once again, extended. Nothing's perfect. Then some of the smaller names from my perfect speculator scan, all these names we're about to go over from the perfect speculator scan. Gilt, thin and extended. SMTX, thin, not extended, but extremely thin. IMMR, very extended. GTT, extended, very extended, but an earnings winner, bouncing off earnings winner support. So nothing here is perfect. I can't tell anybody, load up your account. If you're trading my methodology the way that I suggest it, you put 10% of your account capital per 10 positions in the best setups. In the setups, like, so let's say that my signal today on GTT was like from here. And let's say instead of GTT just having a base for 1 month here, the base is 3 or 4 months. And it's a flat base like this, but it's flat. And then I get this signal right here. And then now you got the 200 above the 50. You got the 50 above the 200, you got the 20 above the 50, the 10 above the 20, and the 5 above the 10, and you get this signal right here on huge volume and max green BOP and a volume surge. Oh yeah, I can tell you all with confidence, push it, push it, push it. But here in this tape, with us still basically overall range bound, and that's all we really are. We are nothing but in a range bound market here between the recent highs, here in between the recent lows, and then on a more short-term time frame, right here. And that's it. You shouldn't have a bullish bias here. You shouldn't have a bearish bias here. You should have an open mind. That's why I was bearish as we rallied into the resistance. We rolled over, and now after that we're selling off. I'm becoming bullish again. I wasn't really bullish here, but after this day I respected that move and went ahead and bought stocks, bought my signals as they produced. But right here I started to get worried. We rolled over. Well, now right here, after looking at some of the sentiment data I've seen, I'm not as worried. So I'll continue to trade the market like I trade it. If you're looking for only the most perfect signals, sorry guys, they're just not out there. One of the best signals is actually in a speculative name that I don't mind posting here, AVYA. Why is this a better overall signal? Because you got the hammer candle coming off support, multiple support levels, 1, 2, 3. You got the volume surge today. It's not heavier, but it's a good reversal of the previous day, and BOP is increased again. But once again, it's not like it kept max green BOP the whole way. It's not like this pullback was for more than a couple of weeks. It's not like volume was quiet on the pullback. And look at this huge volume off the reversal. So it's not perfect, but all the green tall accumulation bars and all this green BOP is a strong sign. And if AVYA works, I'm looking for a move similar to this, while only risking off that level. So, you know, that's probably your better signal out there, and it's not a Can Slim or perfect speculator quality signal, so it is what it is. But that's the market we're dealing with. And there is no shame in being in cash and staying in cash through here, waiting for, you know, all clear skies ahead. But I keep telling everybody, by the time that happens, it's normally too late. The market's in another V-shaped move to new highs, and nothing's even remotely safe to buy. Most of these long positions are not technically safe as they're all extended. extended, some by 2 times, like Etsy, which is extended from its 10 and 20, SNI, IMMR. So there's just a lot of really extended stocks out there. And as long as the market does not ebb and flow properly, it's just what we have. Now, on that note, I'm going to start using more option activities with the SPY, looking to trade the SPY and the QQQ based on their wild, volatile intraday moves now. So I'll be allocating some capital to that, and I'll be posting those in the chat room. The trade idea on Friday didn't set up thanks to the market gapping down, but I think I want to go ahead and buy some QQQ calls at the market open in the options market at the money, possibly the May 2018 expiration at the money in the money calls for a move higher Monday and or if not for the rest of the week. But we'll see how that goes. It's just test methodology. Been watching it for a while. Always been interested in options. They're very lucrative in volatile markets like we have now. And now that we have a volatile market, might as well go ahead and start poking around on that end. All right, everyone. I'll see you in the chat room on Monday. Have a great rest of your weekend. Aloha.